Hello, I'm David Gerard. This is Pivot to AI, coming to you daily. Today, let's talk about the vicious scoundrels of Silicon Valley. All the mind-numbingly stupid and horrible stuff they do isn't a secret in any way. They happily talk about it to anyone who asks them. It's all out there. You just have to go read it. I'm going to tell you again, subscribe to the pitchbook.com daily newsletter. It is the news site for venture capital. And if you hate the AI bubble, then PitchBook will have you giggling. Because you know what? Things aren't going great. PitchBook also does reports, and these are comedy gold as well. Today, I'm looking at PitchBook's US VC-backed M&A outlook for second quarter 2025 and PitchBook's 2025 US venture capital outlook mid-year update. So, the AI bubble is a bunch of venture capitalists kiting checks to keep an economic bubble going as long as they can. It's not like the housing crisis in 2008. It's more like Enron in 2000, except it's a whole bunch of Enrons, and they're Enronning as hard as they can. Here's all the spin PitchBook can put on the awful state of things. Quote, "A confluence of factors, lower startup valuations, need for liquidity, and prolonged funding drought have created favorable conditions for smaller scale M&A." Unquote. That's mergers and acquisitions. So what they're saying is times are good for M&A because times are bad for everything else. The companies are going nowhere. They can't exit and cash in. They're running out of money, they can't get more funding. So either the company just shuts down and all that imaginary book value evaporates, or they merge two loser companies and hope there's an investor next quarter. Quote, "VC-backed companies have emerged as significant buyers in the market, particularly well-funded AI startups. In total, approximately 36% of completed M&A transactions have involved a VC-backed company as the buyer." Unquote. So a venture capitalist tells one of their portfolio companies to buy another portfolio company, and the books look a little less bad for a moment. In finance, this is called two drunks propping each other up. At the top end of the scale, this is when OpenAI buys a pile of smaller companies in the desperate hope that one of them has an actual product that might make money. And it's always a stock trade where OpenAI offers them imaginary shares in OpenAI and never actual dollars. With smaller companies, they just merge them. They twiddle the books a bit and they hope the combined company doesn't die, or not straight away. The whole purpose of venture capital is you invest in a company, it exits, it does an initial public offering on the stock market, or someone just buys it, and everyone gets paid. Hooray! How bad are exits, though? There's a huge number of private companies funded by venture capital that want to exit and they cannot exit. And they can't get funding in the market because, quote, "In Q1 2025, the median time since a VC-backed startup's last raise hit 2.4 years, the longest on record and more than double the 2021 level." Unquote. Is there anything that can stop the merger train? Yes, it's President Trump. Quote, "Antitrust concerns continue to be a hurdle, especially for big tech, under the Trump administration." Unquote. Let me remind you that the VCs are the specific guys who thought President Trump would give them everything, and now they're upset the leopard ate their faces. This is why Meta didn't just buy out Scale AI. Meta did a complicated deal where they bought 49% and grabbed their CEO, and then they turned Scale into a vassal state of Meta, and other companies don't want to work with Scale anymore because it's really Meta. But technically, they didn't buy them. Maybe they'll get away with that. I love the subheading in this merger report. Quote, "Finding silver linings amid macro uncertainties." Unquote. You don't say maybe there's a silver lining if things are not just turbo screwed. Thanks for tuning in to Pivot to AI. If you know someone who will cackle at venture capitalists having a sad time, send them a link to this episode. Please hit like, hit subscribe, post a podcast review, and Pivot is funded by you, the viewers and listeners. And this is the time of month I put out an even louder call for funding. If you send just $5 to the Patreon linked in the show notes, it really helps a lot. If you would buy me a drink once a month, this is that drink. Also, we have t-shirts and mugs and all sorts of merchandise. It's pretty good quality too. Link in the show notes. Thank you all. See you tomorrow and bye for now.